What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did have a very bullish day after we did get the May CPI data. Is the stock market ready to continue to climb higher from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did go up 0.46% and we did get a break and close over that critical resistance level at 423. Remember, SPY was struggling to break that level for about 4 days, but today we did break and close above that level. Now, normally when we break over a level, you want to see follow through, so you need to watch that level very closely and do make sure it is holding up as support. But because we did break that level, we are looking ahead now to new price targets above at 425. A break and close over 425 means the SPY is likely heading to 430. Again, don't look ahead. 425 is your next price target, and that is going to be your next critical resistance level as well. You now have downside support at 423 and 420, with 420 being one of the more critical support levels. If 420 starts to break down, that's an early warning sign that the stock market is likely getting ready for that pullback. The 20 simple moving average has curled up and it's very positive sloping, which is a bullish indication, and it's now sitting there at $418. A close below the 20 simple is your sign that the market is likely rolling over. Remember, we still have the weak spot in the middle of June, and right now, because of how bullish the market's looking, that's more than likely just going to be a shallow pullback before the bullish market likely continues to run to brand new all-time highs. So right now, if you've already missed this move, it's not advised that you go chasing it and try to FOMO into the market. Nothing goes up in a straight line forever, and it is very likely after we get to the next price target, or even right now after we've broken through this price target, that we could get a nice shallow pullback and at least retest this 20 simple moving average. So far so good for the bulls, and it does look like as long as the FOMC meeting does go well next week, we will see a very strong bull run going into the summer of 2021. All these moving averages are still very strongly stacked to the bull side, and it's not going to be a bull market that's going to die easily. There is a ton of support below SPY for all kinds of buy the dip scenarios, and it's going to take a lot of big selling pressure to break down these support levels and drive this bullish trend out of SPY. So right now, this is a full bull market, as it's proven time and time again with the bullish trend and all of the price action breakthroughs. On the NASDAQ 100 triple Qs, we went up over 1% today, and the triple Qs by far had the best day of all. We saw the triple Qs blasting and closing above that critical resistance at 339, and we did close decisively above that level. The triple Qs also had another bullish breakthrough today, and that 20 simple moving average did cross the 50 EMA, so the triple Qs now also have a full bull trend. All of these moving averages are positively sloping, and if you're looking at the triple Qs, the next price target above is knocking at all-time high prices right around 342. So 342 is the next critical resistance, and that will be a strong resistance level because the triple Qs will be attempting to break out to a brand new all-time high above that level. Again, going into the middle of June, we should see some sort of weakness going into FOMC and quad witching, so do expect to see some sort of shallow pullback in the very near future. You're looking for support levels at 339, with the stronger support levels being 336.9 and 334.6. The 20 simple moving average and the 50 EMA are very likely going to be right around 332.5 by the time we get to the middle of June. So that could be where we bottom out and ultimately find support before bouncing and continuing this bullish trend. Remember, these bull markets don't die easily, and you can see all of these support levels below the price action while having a full bull trend. So there's going to be a lot of buyers of the dip, and there's likely a lot of people who are missing this rally who are just dying to get into this market, and they're just waiting for that pullback until they buy in, which will cause this bull market to extend. On the Dow Jones, we were pretty flat for the day, only going up 0.06%. So we definitely see some sort of sector rotation with money sort of leaving the Dow, and it definitely looks like money was flowing into the tech sector. However, the Dow Jones is still bullish because the bullish trend is still intact. However, the price action does look like it wants to come back down and retest the critical support. That critical support is of course going to be the 20 simple moving average, which is sitting right around 344. If 344 breaks down, you're looking for possible support at 341.7 or the 50 EMA at 339.6. Don't forget the Dow Jones did sort of see a double topping pattern off of that all-time high resistance level right around 348. If the Dow Jones breaks above 348, it will validate our next price target at 350. On the Russell 2000, we saw a lot of selling today, going down 0.89%, and the Russell 2000 did break below that support level at 230. I reminded you this last night that was not the strong support level, so it is likely we will see the Russell come back down to about 227.8. That is a much stronger support level, and it's also the breakout test of resistance as support. So if that support level does hold up, that will be bullish, and we will be looking for the Russell to retest the resistance levels above at 230 and 233. If this resistance trendline breakout does not hold up as support, you're looking for another support level at 227 or the gap fill at 223.75. Note the Russell is in a full bull trend, so this selling is not bearish. It's just a pullback, which we will expect to see in the other indices as well. On Arkk, we did have a bullish day today, going up 1.88%, and we finally did see Arkk breaking and closing above the 50 EMA. This is a bullish price action breakthrough, but we still need to see some follow through, and we need to see a few more closes above this level. So Arkk could now find support at 114.5, and if that level fails, you're looking for support at 112.68 or down here around 109. Remember, Arkk does not have the benefit of a full bull trend yet, and we need to see the price action continuing to close above the 50 EMA to give time for these moving averages to stack to the bull side and start crossing back above the 50 EMA. However, this could be a time to get long on Arkk, and you could set your risk level on a close below the 50 EMA or on a close below about 112. Remember, at some point, you have to set your risk level and you just have to jump in and you have to manage your position. Right now, it definitely looks like Arkk is breaking out of a resistance trend line, and even though we could come back down to about 109 and retest that breakout, this is still looking like a bullish development in the longer term. On the VIX, we see the VIX getting absolutely destroyed on a day like today, going down 10% and closing below our support level at 16.65. We see the VIX looking like it is going much lower, and remember that a low VIX means low fear, which does go hand in hand with all-time highs. So the VIX is validating the bull market, and we continue to see the VIX going lower as we see the market going higher. That's exactly what you want to see if you're bullish on this market, and as long as the VIX continues to get beaten up and continues to go lower, we will continue to see the stock market going higher. Remember, the lower the VIX goes, though, the market is likely to get a lot less volatile, and it will be more of a slow grind higher. So watch the VIX very closely, because if it does start spiking above 18.2 and then getting back above 20, that will likely mean we're going into that deeper correction, but right now we just don't see that, and the VIX is telling us to expect higher prices. On gold, we see bullish price action today, closing back over the 5 EMA, and we do see gold holding on to that bullish trend. Gold did find support at our support level down here at 1876, and it does look ready to run to the next price target at 1923. On silver, we also saw a bullish day today, closing back over the 5 EMA, and we see silver trying to maintain a bullish trend and get back to closing back above the resistance trendline level at 28.3. If silver can get back above about 28.3, look for the next price target above at $29, with downside support around 27.8 and 27.6. On Bitcoin, we're currently down about 2.66%, and Bitcoin has still had trouble breaking out of this level around $37,500. If Bitcoin can't break out of this level, it continues to find resistance at, then it's not going back into a bull market. So look for Bitcoin to try to break out of this level and try to get back above 39,000 to possibly start building back up a bullish trend. Bitcoin will still need to get back above the 50 EMA, so that means we will still need to see a break over 43,000 after we do see a break above 39,000. If Bitcoin gets rejected at resistance, we're right back down here looking at our support levels at 30,000 and 27,000. Look at the Bollinger Bands on Bitcoin, and you can see that a big move is definitely coming, and you don't want to make any assumptions on which direction that move is going to be. Right now, if Bitcoin can't break above resistance, we will see a big move to the downside, so make sure you're prepared for that. If we do see Bitcoin blasting through resistance, we could see a huge move to the upside. So watch the critical resistance and support levels very closely, because that's going to tell you which direction the move is going to be. On Amazon, we went up over 2% today, and we finally see Amazon with that big bullish breakout day. We see Amazon closing above our resistance trend line at 33.35, and it does look like Amazon is getting very close to going back into a full bull trend. We could see the 5 and the 13 EMA are crossing back over the 50 EMA, and now we just need to see that 20 simple moving average crossing back above the 50 EMA as well. So right now, look for Amazon to possibly find support at 33.35 or come back down and retest the 32.61 level. If Amazon continues to run from here, your upside price targets are 34.58, 35.43, and 35.73. So there is plenty of upside left in Amazon stock, and it looks like it's just now getting ready to start running after this breakout. On Tesla stock, we went up 1.89% today, and Tesla stock does look like it is trying to break out of this resistance trend line. We do have resistance on Tesla at the trend line and at our 626 level, and if we break above that, we will have resistance just above at the 50 EMA, which is now at 639. Remember, Tesla is still in a bear market and it has no bullish trending, and it's still trading below the 50 EMA. So just like with Arkk, you want to wait for that breakout, or you want to get in and you want to set your risk levels very well defined, because we could still go much lower. So the downside support levels on Tesla are right around 594 and way down here at 546. So be prepared if 594 breaks down to come back down to 546. Otherwise, we could try to break out and retest resistance at 626 and the 50 EMA at 639. On Apple stock, we don't see Apple joining the bullish rally in tech today because we see Apple going down 0.8%. Apple continues to struggle to break over this critical resistance at the 50 EMA, which is right at 127. If Apple can't get back above 127 and close back above 128, there's no way it's going to get a bullish trend. However, with the rest of the tech sector looking bullish, it is very likely that Apple is just lagging behind and it will try to rally in the very near future. So overall, as long as this support level is holding up at 126, this could be a great time to get bullish on Apple and set your risk level right at this support level. If Apple breaks below 126, be prepared for it to come back down to 123. If Apple starts breaking above 127 and 128, it's very likely going into a bull market, so pay very close attention because this is a very great setup in Apple. On the financial sector, we dropped over 1%, and we do see huge selling in the financial sector on increasing volume. This could likely be the beginning of a sector rotation back into the tech sector, so this is a very important thing to pay attention to. We could see the moving averages are starting to cross back below the 20 simple moving average, and it's very likely the price action is coming back down to the 50 EMA. On the industrial sector, we also saw selling today going down about 0.5%, and just like with the financial sector, it does look like we are seeing money rotating out of industrials today. Look for industrials to possibly come back down to retest support at the 50 EMA. On the healthcare sector, we went up over 1.7% today, and the healthcare sector is looking very bullish. The price action is back above all the moving averages, and we're back above a positive sloping 20 simple moving average. Once the 13 EMA crosses back above the 20 simple moving average, the healthcare sector will have the full bull trend, and it could continue to run higher. On the energy sector, we dropped 0.13% today and closed right above the 5 EMA. The energy sector still has a positive bull trend, and it still does look bullish, like it could continue to go higher from here. So jumping back over to the S&P 500, we can definitely see a lot of the sectors do look like they're rolling over, but we do see a lot of that money going into healthcare and technology. So the S&P 500 was still able to rally today, even though we did see selling in the financials and the industrials. So with money flowing into tech and healthcare, this could be a sector rotation, and it could be getting ready for a brand new bull run in those sectors. So right now in the big picture, after we get through the middle of June, if we can make it through the FOMC meeting without any bearish news, it is very likely that we have a very strong bull run in the tech sector going into this summer. So plan accordingly and make sure that you have a trading plan or a long-term hold plan for the summer if we do see this bullish event. Overall, going into the middle of June and going into quad witching, we could easily see volatility, but use that volatility as a time to accumulate great positions. Right now, it does look like SPY could continue to go to brand new all-time highs, but we are due for a pullback in the very near future, so watch these critical resistance levels very closely and make sure you're following the price action. Remember, the price action at critical resistance and critical support is everything you need to know. Everything else is just noise. So stay objective and follow the price action and follow the trend, and remember that you want to be a bull as long as we're in a bull market. Also remember, on the Stocks Channel Discord, I'm doing intraday updates and analysis to help you navigate this market, and I'm bringing plenty of brand new trade ideas to help you crush this market. If you're interested in joining the Discord server, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.